Chief Investment Strategist, SJ Seymour Limited Hong Kong joins us. Dariusz, before we go to Australia, can you tell us, are you worried about the sharp pullback late session in Hong Kong that we're seeing?
I wouldn't be too concerned about that because I consider the pullback to be just a correction. The index was really overbought on the RSI chart, and between the low point in the August crisis and the high point today, the index has risen by 50% almost. So clearly there was a lot of ground to take profits. I think this is what happened, but over the remainder of the fourth quarter, I think that we'll be moving higher here in Hong Kong.
So Dariusz, as an investor in Hong Kong, what do you do? Do you sell at this point in time, or do you sit and wait and do some bargain hunting?
I think that I wouldn't buy necessarily tomorrow because I want to see how the market continues to perform, given the fact that the sell-off today was in very large volume. However, if you want to commit your money for several months, I'm sure you will be you will make the right decision investing even at current levels if your horizon is, let's say, by the end of the year.
Dariusz, it's Michelle here. What about the global credit turmoil? When we're talking about Australia, how vulnerable is Australia to the global market turmoil that we've seen in credit, in particular in the wake of these comments coming out of Deutsche Bank? Does that ease any of your concerns?
I think it's really positive that we know by now what is the damage done to the third quarter results of major banks through the credit crunch and subprime mortgage problems, and it seems that the damage is contained. So, it seems that it's really a good thing that all these structured products have allowed us to diversify risk away just from banks to all kinds of investors, and I think we can now look forward toward the future, knowing what the losses are, and the future seems to be quite bright because policymakers have told us, have sent clear signals that they will do whatever they can, whatever it takes to make sure that growth globally doesn't really slow that much. So I think that the outlook is fairly positive for global growth and for equity markets, including for Australia.
Dariusz, it's also the problem is, though, of course, if we are getting through this credit problem, and as Michelle said, people like Deutsche Bank start clarifying it, the focus will go back fairly soon, won't it, to growth and inflation becoming an issue and the end of disinflation caused by the likes of China and India. I mean, how much of a headwind might we then be facing in 2008?
I think that as far as inflation goes, commodities will not move much higher next year compared to this year's levels. And this means that the inflationary impact will not be that dramatic. In fact, we have seen that inflation isn't really, well, it has subsided clearly in the US and in the UK. In the Eurozone, it's maybe moving a little bit higher, but still very well contained compared to other major economies. So I think that the scenario for next year remains quite balanced, of maybe somewhat slower growth globally, especially in the US, but still solid performance and inflation fairly contained. And this is a good environment for the stock market.
All right, Dariusz, thank you very much for being with us. Good talking to you. Dariusz Kowalczyk, Chief Investment Strategist, SJ Seymour.